All right, you are looking at a daily chart of the Nasdaq, and I have a lot of things to say about the Nasdaq today because it made this run here from 12,543 on October 26th and rallied strongly up until December 28th at 15,150. So in that 2-month span, it had a 21% gain. Okay, and so it topped, I mean, a short-term top. Now it's pulled back for 5 sessions. So it went up 21% and has given back 4%. And boy, you'd think the sky was falling. I mean, people are crying in their beer and getting all bearish. This is normal, quote unquote, normal action for January. If I've done the homework, so you don't have to. But I wouldn't worry too much about this. In fact, the Nasdaq was down 82 points today, or 0.56%, and closed at 14,510, which is 4%, off that high, and it still is 2.7% below this uptrending 50 simple moving average. So even if it pulls back there another 2.5%, I mean, big deal. It gives back 6.5 after a 21% gain. I wouldn't be surprised if it gave back half of that move. So you just got to be patient, just relax. To me, I believe that the bull market started on May 10th, and we're just, like Bon Jovi saying, we're not even halfway there yet, right? We're not living on a prayer either. This is fine. This is normal. I mean, if you bought up here and pulled back and now you're underwater, well, you have to sell those or take losses. I mentioned many times when it was 7-8% above that 50 that it's going to pull back to that number eventually. It always does. We're still in a power trend. I know that the short-term moving averages are curling lower. It's down 5 sessions in a row. What you want to see, and what I saw in a lot of stocks today, is they stop going down. They stop making, these lower lows. It just, you want them to go sideways and not just continually go down every day. But we know that what moves the Nasdaq, and that's those mega cap tech stocks. And I'm going to get to that in a minute, but you need to, keep things simple and stay flexible. Our best ability in the market as traders and investors, our best ability is flexibility. So remain flexible. There are some catalysts coming up here tomorrow. We have the jobs report, and then we have the Consumer Electronics Show in Las Vegas, and then the JP Morgan Healthcare Conference in San Francisco, which kicks off next Monday, I believe. So you're going to see one thing about that JP Morgan Healthcare Conference is you're going to see some news out of there. I'm not saying there's going to be a lot of M&A, but there's going to be news like we saw with Lilly today and with Novo Nordisk. Yeah, I'm big on the XBI. But anyway, let's get to, I guess I'll go to the Russell first. The Russell was down again today. And to me, I think you got to go to the weekly and just, this had a big move as well, and now it's pulled back the last couple of weeks. But to me, this has not even broken out yet. I believe the small caps are going to have a good year, and they're going to be up quite a bit. But it's starting off a little rough here. But it was extended just like the Nasdaq and needed to pull back. And I always refer to the 10-year. The 10-year's been jumping up a little bit here. I got to go to the daily, and it's not a seesaw where this goes up and the Russell goes down, but it's a trend, and you can see this trend is lower. It spiked here the last few sessions, but it's trending lower. Okay, now if it starts trending higher, that's another story. But it's because of the Fed is saying that they're going to continue to raise rates and blah blah blah. But that's a long ways from happening. I think you got to stick with trends. And that trend is lower on the 10-year. And with the Russell or the IWM, the trend is higher. I mean, from this low to here, that's quite a move. Like I said, this hasn't even broken out yet. So it's giving you an opportunity if you're interested. Okay, I've got a bone to pick here because there's been a couple of firms, Barclays, I don't know who else. There's like 3 or 4 firms downgrading Apple and with slow iPhone sales. I don't know if there's slower iPhone sales or not, but why not just wait till January 25th and they report earnings? Probably because they have an agenda, probably. I'm not saying they do, but and people do strange things for money. And to me, I don't know if Apple's iPhone sales are strong or not. This is a stalwart of a company, though, and for it to trade down from their 199 to 180, that's a nice little haircut there of a 10%. But I'm just going to wait till January 25th and let them tell their story and give guidance going forward. There's no need for all these downgrades ahead of earnings. Same with Microsoft and Amazon. They were downgraded, and this is it held up pretty well actually for a downgrade. This thing's just going sideways here, but you can see the moving averages are still trending higher. Amazon, I mentioned, they got a downgrade as well. Did not handle it very well. Pulled back to the 50, nearly a 3% loss on that downgrade. Anyway, this is why your Nasdaq is down. It doesn't take much selling from $3 trillion companies to fund some of these small cap, companies as well, which we're seeing this money flowing into other sectors. Meta Platforms was flat today. There was a report that Mark Zuckerberg sold a bunch of shares, and when a CEO sells shares, it's not a reason to sell a stock. It's not an indication that they don't like the stock. They're just diversifying their portfolio, taking the money out, buying real estate or gold or bonds or something, and buying a yacht, whatever. But when management sells, that's not a reason. They're just diversifying, and that's what responsible management should do. Not put all their eggs in the Meta Platforms basket. Anyway, Tesla, that had pullback today and then kind of flattened out. Let me go to the 5-minute here on Tesla. Yeah, okay. So it pulled back in the morning, then ran up, then sold off, but just flat on the session. That's a nothing burger for Tesla. Anyway, NVIDIA was strong today. I was looking at it middle of the day. Okay, finished up nearly 1%. Not bad for NVIDIA, but these are going nowhere. And after going up so much in 2023, you can't expect these Mag 7s to keep going up. You just can't sit in them and expect 50, 100% gains every year. That's not realistic. And so these are being sold, and the money's flowing into other sectors. One of the sectors is the drugs, the medical, the biotechs, and these are doing phenomenal. This is Novo Nordisk, which we had on our ready list this week, and it certainly popped off its 10 EMA there with strong volume. They had news. I mean, they're if you just go to the monthly chart, this is one that you just put in your retirement, like Costco or Home Depot or Apple, and just kind of forget about it. This is not really a day trader stock for me, but the day traders had a good day today, up nearly 4%. Eli Lilly, people are concerned. I mean, what's happening with Lilly? It was up and now it's down. What has a gap to fill here in its chart? They're at 592. So, it could go to 592 and be back to 620 in a day. So I wouldn't sweat Eli Lilly. This is another, what Peter Lynch would call a stalwart, where you just put it in your portfolio. And I think the new management came around 2015, right around here. And yeah, he's done a great job. So I'm not worried about those two stocks at all. They did not participate in the rally, Novo Nordisk and Eli Lilly. And so now the new year hits and the tech stocks get sold and these things start doing a little better. So COR is one that I haven't covered. Syncora, I don't even know what they do, but it's in the healthcare slot, and the healthcare has been really strong. I've got to go to the weekly for this because it's got this nice consolidation, 3 weeks tight, moved up, 3 weeks tight. Kind of a slower mover, but we like them when their moving averages are trending higher and the stock is appreciating. AMGN, this is another one of the Dow Jones. I'm going to get to the Dow Jones later on, but this is a Dow Jones stock that's also in the IBB. You could see this nice symmetrical chart pattern here. Also did not participate in that October to December rally, but man, the new year hit and this thing's ready to rock and roll. So Amgen looks good. If I go to the weekly chart, it's up, yeah, more than 5% this week. So that's a happy new year for Amgen shareholders. I got to go to a couple of these speculative stocks that I own small. This is TGTX. If I could put the ticker symbol in, then we can look at the chart. And this one has a gap here at 1956 here that I think it will fill. I know I've mentioned this many times. You guys are probably getting tired of this stock, but it ran hard. I mean, it ran, nearly a three bagger here from 6 to 18, and then formed this little flag type pattern as it pulled back to its 200. Now it popped today nearly, 6.5%. There's some stuff going on with this company and its competitors. I think will be favorable news coming probably in the not too distant future for TGTX. Viking Therapeutics gapped, no, it didn't gap. It just pulled back to its 21 and bounced. See, that's a nice bounce. When your stock pulls back to a moving average like the 21, you want to see it bounce 6.78%. That's nice. That's a bounce. When they only bounce like a 0.5%, that's a tepid bounce. But Viking had a strong bounce today. And the last one in the medical biotech space is KURA Oncology, which has been on our watch list, ready list this week, and certainly has made a nice move. It's up nearly 9% this week. So congrats to the longs there. And you could see it's been up, oh boy, 8 or 9 weeks in a row, just like the index, and now moving out of its base here. So yeah, congrats to the longs there. That one looks good. Anyway, I've got to move on to a little bit more dour news, and that's MobileEye. They lowered guidance, and I went through their note, and I really couldn't pinpoint exactly what the heck they're talking about. But anyway, they got a 25% haircut today, and that bled over into other parts of the semiconductors. Some pin action in some other stocks. This is an Intel stock, by the way, an Intel spinoff. On Semiconductor was down nearly 4%. I didn't look at Intel. This is a Dow component. Yeah, pretty much flat on the session. But AEHR, this is the, auto components, which was, I think what that was MobileEye's issue. And that's why ON and AEHR were down today. And then Qualcomm, we have to take a look at Qualcomm. Yeah, this one's just diving here. Doesn't look good. Couldn't find support at the 21. So, the next stop is, we'll see. AMD did stop the bleeding today, just hanging on to the 21. And that's what you want to see. I know it was at 150 and it came down to 130, and, that's upsetting, but we just want to see it stop going down, stabilize, maybe form a little flat base here for a few weeks. They have earnings at the end of the month, so we'll have to wait and see. On AMD, Lisa Su did talk about, their new products, and there's a 400 billion addressable market for AMD, and they're going to get a chunk of it. So I expect this forward revenue to hopefully they raise it here on January 30th when they report earnings. Anyway, that's it for the semiconductor. So I did the drugs, the semiconductors, the Mag 7, and I've got to get to the oil. Oil had been spiking, and then I thought they're going to have a strong day today, but they just sold off. This is Kellen Petroleum. It was bought out by APA. And I was really surprised that this was bought out or that they sold. They agreed to be bought. But anyway, it was up with heavy volume today. And congrats to the longs. I mean, if you owned it from 28 to 34, that's a nice move. For Kellen Petroleum, Weatherford, this thing can't get out of its own way. It's been on our ready list, and it just keeps pulling back and pulling back. Sliced its 21. Today it sliced its 50, and it's adios muchachos for me. You got to wait for this thing now to settle down and then rally back through before I'm interested in that stock. Again, TK Tankers. This one should have been on our ready list, but it hasn't been. Sorry. But anyway, it's got this nice flat base consolidation and now starting to move out, up 8% this week, but I missed it. Sorry. Anyway, can't win them all. STNG. This is Scorpio Tankers. Got to go to the weekly on this one. This one has a beautiful cup with handle pattern. Now it's up nearly 6% this week. Another one that I don't have on our ready list, and it's kind of moved out. So sometimes you just got to, let them go and catch the next one. As Mick Jagger says, they come and go like streetcars. But he wasn't talking about stocks. Anyway, I'm going to move on to the. This is what I call my Johnny Depp stock. It is the Zim. It was up 11%. It needs pirates, masquerading in the Red Sea for it to get some momentum, but it does have momentum, and it's you can see all this volume coming in. You want to own it on days like today, but you don't want to own it on days like these. When it's down, 11%. You want to own it when it's up 11%. Anyway, I'll stay away from this one. I do like it better above the 200. And you could see the 10 and the 21 are curling up, and even the 50. Now the shorter term moving averages are curling up. So I don't know, maybe I'd get interested in it around 15, but that has a lot of work to do. And I just do not like news-driven stocks. These shipping stocks is MATX, MATX is another one that's been ripping, due to the news. It's news-driven, broke out here a couple weeks ago. So, that one looks good. I mean, I'm just observing here, just reporting on what I'm seeing in the market, and the shippers are getting some love. Yeah, that is the Johnny Depp trade. Anyway, I'm going to get out of there and go to my favorite sector, the retail sector, and this is the ELF. Man, people ragged me on this stock when it was down here at 88, like it's gonna die, and then it went up to 153, and everybody's celebrating, and then it pulled back to 130. I mean, obviously, you'd rather buy it at 130 than 150, and that's the problem with trying to buy breakouts, is when they break down and fail, you get shaken out. And that's the idea of a handle. This the whole idea of a handle, is to shake people out. People, if you bought, 145, 150, and it pulls back to 130, you're going to get scared and panic and sell your stock. And that's the whole idea. And that's why you need to do your homework and have conviction on your stocks. I just go back to the pattern of this stock. It's been a real strong stock. And despite its huge appreciation the last couple of years, it's only a 7.5 billion market cap stock. So to me, this has mind share and it's taking market share. And you can see this base last summer, I mean, summer of 22. This is June, July, broke out, ran all the way until September of this year and formed this base here. And now it went 3 weeks tight and pulled back down nearly 5% this week. So if you're down 5%, you're saying this stock sucks. But that's the whole point of a handle. And this could last a while. So to me, it's giving me a chance to get in. If I want to buy this stock now, I'd rather buy it here at 135 than at 153, if that makes any sense at all. Of course, you'd rather buy it at 88, but that ship has sailed. It's not going to give you that chance again. And I've had this on the ready list for a long time. So yeah, just keep watching ELF. I don't think it's going to run away from us here, but it's definitely one that I like. Also, another one that I like is Celsius. And I showed you the downtrend line here from yesterday. It broke above it. Broke above this downtrend line. If it hits in 3 spots, and that's a downtrend, and it hit 3 spots there, 1, 2, 3. Broke out above it on Tuesday, pulled back to its 10 on Wednesday, and now popped more than 2% today. So that's not a bad pop, but to me, that's still very actionable. It's a stock that I really like, and I think it's giving us an opportunity to get in. There was a big whale selling, and I think the whale's gone. It swam away. And now I think the waters are safe to put a toe in on Celsius. All right, is that it for me today? Oh no, AEO, American Eagle. People were asking me about American Eagle. They went ex-dividend. Sometimes when stocks pay a dividend, they have to pay it somehow, and the stock pulls back on ex-dividend day, and then okay, so the next day it goes up 1.34%. Yeah, it's got a 2.5% yield, which is not bad. I mean, somebody's got to pay for that. So oftentimes when you see a company go ex-dividend, especially smaller companies, they'll pull back a little bit. This is a 4 billion market cap company with a 2.5% dividend yield. Not bad for American Eagle. Oh, I know what I'm going to go to the software, because I talked about our new bull market, which is in the early innings, and I believe the software and semiconductors are going to be leaders and do well. And this is one that I had on our ready list today. This is a Giga Cloud Technology, and it was only up 10% today with 200% above average daily volume. Anyway, that's a nice move. And I just wanted to point out that some of these stocks in the software now this got downgraded today. This is another downgrade from Snowflake, and it didn't, it went down a little bit, but it kind of stopped going down. It was only, down 49 cents or 0.27%. So I'm going to keep my eye on this one. And if it can hold there, that 180, 182 level, I think that's healthy, especially with the indexes selling off the way they are. MNDY, Monday's another one that I like. and it's stopped going down. Okay, it made a low here today and then, reversed and closed flat. We like that. That's healthy action, I think. And yeah, so yeah, it's fine. It's, the low volume, you see the light volume here just going flat. The low of the session was 170. And so if it could just hang there at 170, I think that's healthy as well. So I'm just watching these, I'm just observing, not buying anything or going out and on a Santa Claus spree here for Christmas, but just observing these software names. Datadog's another one that made that low today of 110.70, and we'll see if that holds and if it can just go sideways and hold that 110.70 level. ESTC is another one that I like. Yeah, it's just kind of flattening out here. Yeah, it's sold off, but it's still holding. Was down 102.81 yesterday, 102.93 today, and if it could just hold 102 and just go sideways for a time, that's fine. You want them to stop going down before they go back up, So anyway, that's it for me today. No, I wanted to check out Team too. Yeah, Atlassian, that one's fine as well. They're kind of holding in their software names. That's it for me today, except for I have one more thing. One is the Bitcoin thing. I don't talk much about Bitcoin. I'm not Charlie Munger, the late great Charlie Munger, you know, against Bitcoin, but I like to be able to read a balance sheet and look at earnings, quarterly earnings reports, sales. And so this is not for me, but I will just note that if you note the stock, how it made this base, this is a nice base, and how tight the daily bars are, until it starts breaking out here on December 1st, 14% move. And it's still traded kind of tight here. You're looking at, 50% on the day, and then it just starts going wild. $3 moves, 2.5. This right here is $3 moves. This here is a crazy move, 16%. And so when they start trading wide and loose like this, I don't like that. And usually I think that's a bearish sign. The people are undecided of what the thing is worth, so to me, I would stay away from that, but it does have the high tide flag component where it ran up, more than 100% and kind of made this flag. I don't think it's anything near tight. It's got the high and the flag part, but there's nothing tight about that. Anyway, I just wanted to point that out with the Bitcoin. I put it on my morning report, but this is not something that I'm going to purchase or participate in. So, but I know a lot of people like Bitcoin and the Bitcoin related stocks, and MSTR is another one that has just gone, a little berserk here. This is a really big gainer from 2023 that, it's doing well. We'd like stocks to go up, and this one's going up. It's up nearly 4% this week while the index pulls back. So just an observation. I don't, I'm not biased. I just don't participate in that. That's just me. So I know a lot of people like to, and that's fine. That's what's make a market. Anyway, I wanted to talk about the Dow Jones Industrial Average. This is Walgreens Boots Alliance. This is a 20 billion market cap stock. And I have not been to Walgreens in ages. And this is still in the Dow Jones. This is why I don't follow the Dow Jones Industrial Average. First of all, it's only 30 stocks, and it's got junk like this in there. This doesn't belong. I use Amazon and Google every day. I use Apple every day. Of course, Apple's in the Dow, but I haven't been to Walgreens in ages. I'm not sure why this is still in. Maybe, I don't know. Maybe they will have a little rearrangement, a shuffling of the deck in the Dow this year and get with the program, because Google and Amazon definitely belong in the Dow, and this does not. They cut their dividend, I want to say from 8% in half to 4%. It's a 4%, which is still a healthy dividend, but man, you cut your dividend, this thing's going to get a big haircut. It was down 5% today, and I would imagine that a lot of people own it just for the dividend, and now that they cut it, I mean, it bounced off its 50 today, but I'm sorry. This does not belong in the Dow, and I'm going to get off my soapbox now and say just thank you for watching. And at mcstockcharts.com, we never give up.